Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, December 20th at about 2:15 p.m. Eastern. Well, before we start, please know that all of us at ToniTurner.com wish you and your loved ones a very Merry Christmas and a happy holiday season. And now on to the markets. Indexes are moving higher today, nicely higher, after data showed inflation cooled slightly last month. Data showed that U.S. monthly inflation slowed in November after showing little improvement in recent months. The personal consumption expenditures, also known as the PCE, that's the Fed's favorite inflation report, price index rose 0.1% last month after an unrevised 0.2% gain in October. And so on that somewhat happy note, let's go on to three charts that can give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $592.04. That's about 3% below its recent all-time closing high. This little tiny candle, if you can see up here, this little tiny green candle, that's the recent all-time closing high. That was on December 6th at $607.81. Now, as we know, in the past week, the SPY fell below its 20-day moving average, and this was Wednesday of this past week, and that was on the Fed announcement. Of course, as you know, they lowered interest rates 0.25%, quarter of a point. So on that Wednesday, the SPY fell below its 20-day moving average, the red line, which is now coming in at $601.18. And the 50-day moving average, the green line, which is now coming in at $591.36. So this past week, the SPY fell below the 20-day, and it hadn't done that in a while. Fell below the 50-day, hadn't done that since September, and that was only a couple of days, 3 days maybe. Anyway, but then today, on actually encouraging news, as I said, on the PCE report and on a quote by Fed President Austin Goolsbee, it popped back up today, and again right now is trading at $592.04, just not even quite a dollar above or a point above the 50-day moving average. It's holding on to that for dear life at the moment. Now, but if we look at a bigger picture, we know that for the most part, the SPY has been walking up the red line, walking up its 20-day moving average. Actually, we can't see it on this chart, but since October of 2023, and back then the low, the SPY low, the SPY low was at 409. So we can see how far we've come here. And during that time, from that October 2023 low at 409, the SPY had walked up a lot of the time, certainly not all the time, but walked up its 20-day moving average and made up into these highs right here, this high we just talked about, actually made a 49% gain. So that's not too bad. From October 23 to now, 49% gain, not too bad. Now, of course, nothing's perfect, and we did experience profit taking along the way. So we can look back here quickly from the July highs at 565. The SPY rolled over pretty dramatically here down to an August 5th, right here, the August 5th open at $511.64, then rallied back up to 565 in August. Then in September, made a quick little low here, back down below the 20-day and 50-day, down to 539, but popped decidedly higher there, back above the 50-day and the 20-day, and moved up above and walked up the 20-day in September. In October, dipped down quickly just before the election down to the 50-day, down to 568. But the day after, that was just before Election Day. Then on Election Day, you can see the SPY gapped open and moved higher up here, then pulled back a little bit to the 20-day, and then kept moving up and kind of walking up the 20-day moving average to where on this past Wednesday it fell, thinking the Fed wasn't going to lower interest rates much in the future. Of course, that's been talked about quite a bit since then, and it looks like that news may be hopefully turn out to be a little different. And so we know where we are now, again, is at $592.04, just grabbing onto that 50-day moving average. Now we know that if we have to look at, say, well, now we know where we are, where is nearby resistance? So we want to put some, maybe jot some numbers down so we know that nearby, for the all-time highs up here, we're going to say that could be resistance definitely at about $608. Now the 20-day, which was support, remember, which was support, if price falls below it, then it becomes potential resistance. So we have potential resistance up here at the 20-day moving average at about $601, and we have nearby support. That's resistance. If we want to talk about nearby support, we have today's intraday low, and so far that's at $581.91. We do have the November low at what do we have here? 568. We've got the 20-day moving average coming in here. I'm sorry, this is the October low right here at 568. We've got the 200-day moving average coming in here at $551.29. So what we always want as bulls, to make it easy, what we always like is for price to stay above the 50-day moving average. That's always a good sign. Whether this can continue into the new year or because next week is a holiday week, a lot of traders take it off, so we could see some pretty quiet trading. Of course, one never knows, but we could see that. So my thing is I keep an eye on the 50-day moving average, again coming in at about 591. Like to see it above that. Definitely keep your stops in place and maybe raise them a little bit if you've made some good profits. We used to say dry powder. Having some dry powder is never a bad thing. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund that follows the NASDAQ 100 index. The top non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like NVIDIA, Meta, Apple, Tesla, Microsoft, that whole group. Now, when I captured this chart today, the cubes, as we sometimes call them, was trading at $521.52. That's 3% below the all-time, look at this, the all-time closing high. That was on December 16th at $538.17. Now we talked about last week, we were right about here because that was Friday, Thursday, Wednesday, Tuesday. That was Monday. Okay, so last Friday when we talked, we were right there, that little green candle. We talked last week about the cubes trading at quite a premium to their 20-day moving average. That means high above. Or it's a polite way of saying if it's trading at quite a premium to the 20-day, it's a polite way of saying it's overbought, overextended, at least in the short term. Sure enough, a couple of days later, the cube started lower, started pulling back, again, back to the 50-day where we are now. So at the moment, the cubes are trading above, at this moment, it's trading just a few cents above the 50-day moving average. So again, cubes trading at 521.52. The 20-day moving average is coming in here at $519.82. So that's like not too much difference. Trading hold on. I said that incorrectly. The Qs are trading above their 20-day moving average, and the 20-day is coming in at $519.82. The 50-day moving average is coming in at $507.05. Now, we can look quickly back to July highs here, back on the left. We had a new high here at the time, as you know, at 503. Then we had a 16% drop, a dive down to the August 5th lows at 424. That was quite a kind of a shocker at the time. Then it rebounded for the next few weeks up through the 20-day moving average and the 50-day, which by then they were inverted, made an August high at 486, rolled over to that September move down, that September low at 448, then rallied back above both the moving averages. The 20-day started moving up over the 50-day again. That's a good thing. And then the Qs walked up their 20-day moving average in September and November and October, then down to the 50-day for a few days right before the election. Then the November pop, then the drop back down, and then started walking along the 20-day moving average again. Rallied to the recent highs that we just talked about, up about 538 and falling to where we are now, back at about 521 and change. So we do have here potential price resistance. If we say if price started moving up, where would potential sellers come in? Well, some sellers would definitely come in here, probably right up here at right around 539, 538, 539. Then if we look at a nearby support, we have today's low, today's intraday low at about 509. Then we have the October highs. And the October highs right here, potential support come in here, right about 501 down, we can call it 500. Excuse me, I didn't draw that real straight. We've got the October low at 484 down here. We've got the 200-day at $472.42. So again, next week is the Christmas holiday season. A lot of traders will be out. This week has been pretty volatile. We'll have to see what happens in the week to come. And as usual, keep an eye on the 50-day moving average. Keep an eye on your protective stops, just to be wise. Okay, our final chart today, a little different, huh? Our final chart today is a daily chart of the XLE. That is the Energy Select Sector Spider Fund, the XLE. It has 22 22 holdings. Top holdings include Exxon, Chevron, ConocoPhillips, Williams Companies, EOG Resources. And you say, Toni, what in the world are we doing here? Well, I did actually go through quite a few charts today. Didn't find anything I liked. Now and then, I like to go bottom fishing, and I do it with a plan, so it doesn't involve much risk. So I'm looking at the XLE here. Now, when I captured this chart, the XLE, as you can see, is trading at $84.09. It is 14% off of its highs up here. In November, its recent highs in November were it was about $98, $97.92, I think to be exact. And you say, what in the world? So if we look back to June, always look back, we can look back to June, 6-month chart, look left. We see that the XLE has been bumping along, kind of normally, bumping along here, kind of trading in a range from right about 94 along its 200-day moving average, about 88 to 94, walking along here, and then dipped in September down to 83, made a low here at 83, then rallied in September, dipped again, higher low, and then up to a high here of 94, so we're back up to that 88 to 94, trading in a range we talked about. Then down to, in October, down to 87, excuse me, down here in November, down to 87 to this low, and then back up, as I said, then gapped up here. And actually, what I think we were looking at here may have had something to do with the election, because most people believe that the Trump administration will be very kind to oil companies. So then it moved up, excuse me, to that November high we talked about at $7.92. And then the fall from there was pretty dramatic. Part of that is because it had become pretty overbought, as you can see on the RSI. So it became pretty overbought, overextended in the process, but then fell pretty dramatically back down to this 84 zone. Now, I looked at a long-term chart, as I always do. There is support definitely in the 80, 82 range on a long-term chart for the XLE. So I wanted to see here, because we got this green candle today, and I looked at some of the holdings that are in the XLE, and they also have a positive candle today, but it happens to be right here on support from September. And there is an amount of support in this zone on a long-term chart. So this is nothing I'm going to bet a lot of money on, but I do want to keep an eye on it. If in the coming week the XLE can stay above, and I'm going to call it 82.50. If in the coming week the XLE can stay above 82.50, I'm going to buy a small position of the XLE for my trading portfolio, and I'm going to put a stop in at $81.96. I'm not going to give it a lot of room here. If and when the XLE can rise above, and this is potential resistance here, was support, now potential resistance. So if in coming weeks the XLE can rise above 88, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XLE in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. One of the favorites, the one that everybody loves, is How to Swing Trade Successfully. This shows you how to enter during upswings, grab the sweet spot from a price move, and pocket your profits before price starts lower. So if we're looking at price moving, just call it a daily chart here. I call it taking the center out of the Oreos, because who knows when it's going to head a little lower. So there's a center out of the Oreo, there's a swing trade profit right there, swing trade profit, swing trade profit. And then when it rolls over, as it inevitably does, we go on to a different stock. You will discover how to trade with my Sleeping Tiger setup. I use that to trade right now, and I've taught it to traders, thousands and thousands of them. And you can use it over and over to make consistent profits. Our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock. I love this bonus. 1 month of Metastock daily charts or Metastock real-time charts for free. I love that. From our ever popular 7 steps to successful trading to what we were just talking about, how to swing trade successfully, trade the trend to profits. I love that one. How to read charts, great for novices. 3 winning setups, great for short-term traders. And how to bottom fish like a pro, love that too. We might be doing that with this trade, right? Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, happy holidays, Merry Christmas, keep green on your screen. I'm Toni Turner, and this is The Market Now.